Recording in progress.
What's up, everybody, and welcome to the Thursday edition of Ninjacators' new weekly live event, Profits at Noon. We have opened the room up just a minute early to give everyone a chance to filter in and get settled before we get started today. Harold, welcome. It's good to see you back, sir.
How's it going, everyone? Hello, Harold.
Daniele, here come some of our usual suspects. It's great to see you guys and gals.
Welcome back.
Awesome. We are going to hang tight for just a minute, give everyone a chance to filter in, get a good seat, and we are going to get started with today's Profits at Noon. If you are joining us on YouTube, we do encourage you to check the description. There is a link to join us in these Zoom sessions. You will get direct access to the Q&A as well as reminders for when these sessions fire off. Awesome. We're going to give everyone a chance just to filter in. We're going to get started in just a minute. If you joined us in the earlier sessions this week, you'll know we had some special guests on Monday. Richard was back in the house on Wednesday, and we have another special guest on deck for you here today. Harold, you missed a great joke yesterday. If you weren't with us, I'm not sure. I was looking for you to to provide our answer since you nailed it on Monday. Missed it.
Yeah, good that you missed it.
We'll have to start doing a joke recap at the end of these sessions. Awesome. Well, we're a minute after the hour here. A couple of our guys are running late. That's fine. We'll give them a chance to catch up with us. We don't want to lose any time today. So we're going to go ahead and start kicking things off for today's Profits at Noon session. As always, I am hosting these sessions with our very own Richard Krugel. My name is Nate, and we are going live 3 days a week, Monday, Wednesday, and Thursday at noon Eastern time for Profits at Noon. We're going to show you the levels that we're stalking for entry, and we will steer you clear of any market traps, news bombs, or surprises that could be waiting around the corner. So you're about to see a lot of cool live analysis from the man, the myth, the legend himself, a one King Richard, and he will also be providing you with what we like to call our levels to lock. So you can watch these levels, these trades in action, and follow up with us and see how it all pans out. So we do encourage you to join us again. Of course, we will be back next week on Monday at noon Eastern time. Also, I do want to mention our special guest in the house today. We do have Will Busby of Pure Financial Academy is here with us today. We are very excited to welcome him here. He is a great guy and he has some awesome stuff to show you. He will be doing some live supply and demand analysis on the ES as soon as Richard is done with today's analysis. And speaking of today's analysis, without further ado, I'm going to go ahead and pass the reins to Richard. He will get this session fired up and I will check in as we hand the reins over to Will, and we will make some room for Q&A at the end of it all. Richard, to you, sir.
Thanks very much, Nate, and welcome everybody. Thanks for attending again. All right, I'm just going to disappear off screen quickly. I'll be back for the Q&A a little bit later. Before I do start today's analysis, just a quick reminder, as always, all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. Right, guys, not much has changed since yesterday's analysis. That's if you attended yesterday's analysis. I'll just quickly, as always, go through the ES, the NQ, the YM, the Russell, gold and crude oil. Going to be looking at the patterns I'm seeing, that in relation to a previous market structure. As you see, there's quite a lot of lines in here. Might be a bit busy for some, but just bear with me. I do like using market geometry, in this case pitchforks, if you're familiar with pitchforks, to sort of map out direction of where a market might be moving towards, where support and resistance might step in this case, in most of the cases, angular support and resistance. And then we also have our levels to lock lines that you see over here. We've got these red ones and these orange ones and these blue ones. There's your normal run-of-the-mill pivot points that you have on the NinjaTrader platform, but we also have our projected ranges which is a proprietary indicator we have here at Ninjacators. It's based on previous days' volatility. All right, so quite often what I'll do is, and again, these levels are going to be making a bit more sense when we actually have the levels to lock newsletter ready, which is going to go out about 15 minutes prior to stock market open in the US on Mondays, Wednesdays, and Thursdays. It's not 100% ready yet. Obviously, my time, since I'm sitting here in Cape Town, I'm up for most of my morning. And by the time you guys wake up in the US, you know, I've written my report to give a bit of directional bias, my game plan for the day. So I think that will be a really good benefit for you guys to have all these levels. And I believe, looking at all of these patterns, etc., where I think prices might be moving towards, mention these levels so that you have a bit of a game plan for, you know, going into the morning session as well as the afternoon session. All right, that being said, let's just do a quick recap here on the ES. And I'm going to not spend too much time on this today like I did yesterday, but I've been mentioning since this low that we've seen here on the 13th, with the ES obviously moving strongly lower, right? We were sort of expecting a bounce at some stage during our previous sessions. Start seeing this three-wave build up to the upside. Just get rid of it. Snap mode sometimes can be very irritating. And we had one up here, move lower, and then I said at this stage, somewhere around here, that if we're going to make another move higher, that's going to take out this high. I think yesterday we were sitting around about here, right? During yesterday's session, that if we were to take out this high, that there's either two sort of patterns that I'm working with here, well, at least in the back of my mind, that we potentially be seeing a leading diagonal, and then we can expect some sort of correction, and then another strong move back up. Or worst case scenario, that this entire thing that we've seen here is getting very close to actually completing a very complex corrective wave structure. And what I'll mean by that is that I'm thinking that we could potentially be dealing with a triple zigzag, just to make things a bit more interesting and a bit more confusing. If you're not familiar with these patterns, I'm just quickly going to switch to crude oil. It's actually a pattern that we've been tracing a while back on crude oil, sort of identified an area, price moved right into that before we identified that area before price moved into it, and look at a beautiful reversal that we had. Obviously, I used market geometry back then, etc., as well in combination with price analysis. But look at this pattern that we're seeing here. We're seeing a zigzag, another zigzag, and another zigzag. So we've got like 1, 2, 3 pushes to the upside, where this could be 1, 2, maybe a larger third push to the upside. Now, if this does sort of play out, it's going to be very difficult to say which one is actually the right one here. Because let's say this is a triple zigzag and we got a little bit maybe more upside potential, maybe up to today's projected range high at 4,117. You see, we also have this upward sloping angular line here that's been acting as resistance quite a few times. Whether that reaches it today, price, or tomorrow, or next week, whatever the case might be, I do expect at some stage that we're going to see a correction to the downside. Now, we won't really know which pattern is the one I'm working with. Is this corrective, or is this a leading diagonal? I still think that both are at some stage, potentially very soon, going to give us a move to the downside. All right. Now, I've also showed you yesterday, because there was some sort of free pass that the guys at Elliott Wave, I won't really want to call their names, big company, it's been around for quite a while. I've been looking at the following pattern in the ES. They've been labeling this entire move that started last year already as a 1, and that this was a 2, and now that we can see one hell of a decline, like sort of end of the world stuff. But I'm not really entertaining that just at the moment. I'm working a little bit more of a, how can I say, closer to what's happening with the current price action and what's happening this year. But let's say, for example, this does happen, then what do we need to look out for in case we do start getting a strong decline? Well, the thing is, if this was some sort of a first wave, this was a second wave, then we would expect price to start really accelerating fast to the downside, meaning that on a smaller scale, you're going to start seeing very sharp movements to the downside with very little sort of pullbacks, followed by more sharp movements, i.e. like very impulsive in nature. Now, that's unfortunately the only thing that's going to potentially be the giveaway that this scenario is actually playing out, that we're going to see one hell of a further crash to the downside. Or what I've been saying the whole time is this potentially just a leading diagonal, very messy, price is starting to build momentum to the upside, and still we're going to get a corrective move. But it's just going to be some sort of overlapping, combination, single zigzag, double zigzag, whatever the case might be, and then we see another move to the upside. Whatever happens next, we'll probably have to revisit things next week. If we do say, let's, from the current levels, get a retracement, going to be obviously tracking a decline to the downside if that occurs, using market geometry again in combination with fib retracement levels, expecting that we potentially see support step in that 50%, 61.8, maybe 78.6, and then another move to the upside. It's all about watching price action to the downside when we finally at least get some sort of decline. But thus far, the thinking that we're going to see higher prices all been working out for quite some time. I do think that there's still potential for a little bit more high prices, potentially back into this upward sloping line that we've had previously, which is currently around 4,117 at today's projected range high. All right, so that's my thinking in the bigger picture. The only thing that changed since yesterday was the price actually breaking this high, which was sort of expected. NQ, not as overlapping as the ES, mostly looking at ES for direction. Obviously, the NQ and ES, they will all go up in sort of tandem. Price structure is not always the same, but also expected price to break this previous high that was set last week. I mean, most of the day price stayed above today's pivot point at 12,898. Just took out on the previous 4-hour candle R1 at 13,055. Might still have legs to go to 13,150 where R2 is. But anyway, not much has changed there either. Just the price basically broke last week's high. YM, very messy. You see how different the price structure is. Obviously a different market comprised of different stocks, etc., etc. But sort of been stuck in a very sort of like ranging pattern since I think since sort of like the beginning of this month. Broke above it, pulled right back into it, and broke back to the upside again. So again, looking for a bit more direction on the ES and what I'm thinking is going to happen there. And then if we do start getting a deeper decline in the ES, we'll obviously start tracking that on the YM and the NQ as well. On the YM, the price already reached R2 at 33,121. Might see a pullback towards pivot point at 32,813, sort of where we had these previous highs over here. Although there was this wick last week over here, might see a pullback to pivot point. All right. Russell market, I'm completely, I don't know, staying out of currently. We've had this range in this box that I've drawn on here for quite some time now, and you can still clearly see that price has been going up and down, up and down, up and down, up and down inside of it. So might have to wait for price to properly close and maybe give us a daily close about either the upper or lower limit, start deciding what direction this market might want to take. But in any case, not really interested in the Russell that much at the moment. So if you're intraday trader, obviously looking at our levels to lock is something that can be beneficial. But again, that will only be really beneficial once that newsletter comes out at some stage. Then gold, which I spent some time on yesterday. And I'm still thinking, and actually there was something wrong with my data today. When I loaded gold, I know that we switched contract recently. Early on, well, you didn't see that, obviously. This low was actually lower than this low. And it's like, I'm sure I was talking about a triangle formation yesterday. So I reloaded my data and it all came right again. So luckily that had happened. So I wasn't dreaming about things. But anyways, this move that we've seen here higher since the end of Feb, I'm counting as a 1, a 2. Potentially this was a 3rd. And now we're giving some sort of complex corrective move as a 4th wave, and then one more 5th wave to the upside. So expecting gold to move higher. That being said, it still does look a lot like price is stuck here in some sort of a triangle formation. All right. And triangles could either be symmetrical triangles, they could be ascending triangles. Obviously, what direction you're looking at. We're looking at a bullish move. We could see this happen, price reaching that high and then pull back, and then we see a breakout, or we could see price giving us a retracement to a fib level in the internal waves. Maybe 61.8, maybe 78.6. I don't want to talk too much here. I still want to give Will some time to talk about these things he want to show us. But whatever the case might be, we are sort of seeing a range that's getting smaller and smaller sideways. So it does look like it could potentially be a triangle. Quite fitting if it would be, because triangles typically appear as the last formation, corrective formation during a trending move, which would then sort of fall in place with that thinking that this could be a 1, 2, a 3, maybe a 4, and then another 5th, and then get a larger decline at a later stage. What's also interesting here is that if this is a 4th wave, then, and this was a 2nd wave, then price already retraced to the 38.2% retracements, typically an area where a 4th wave retraces towards, although this is a triangle. The actual correction would not end here. It would end at the end of, if this is a triangle, that is, and then you see another move to the upside. So still bullish on gold. Price sort of just opened around about today's pivot point at 1,984. Sort of been mucking around there a little bit. On the previous candle, sort of tested R1, found a bit of resistance, moved lower, and is now skyrocketing back to the upside. I think we get a close above today's R1 at 1,992, that we could see R2 being reached at 2,001. That being said, be careful that if this is a triangle, well, we won't know for 100% if it is, then we might see resistance come in at 61.8 or maybe 78.6, or it could turn into an ascending triangle, just to make things obviously a bit more complicated for us, right? Nothing's too easy when it comes to trading. All right, that's gold. Crude oil. I've been spending a lot of time here with crude oil. I was saying yesterday, I'm reading this move to the upside as potentially corrective in nature, that in the bigger picture, still think crude's got more downside potential. Now, we were sitting here yesterday, where was it? Around about here. And I was saying price really came close to reaching this upper median line of a pitchfork. It didn't happen, and that any sort of pullback might be treated as corrective in nature. And we're now seeing another push back to the upside. We also have a 61.8 fib retracement level, around 74.70, and that's just measured from this high that was set in the beginning of this month to this low on the 20th. So that's sort of overlapping with that upper median line, could potentially be a place where a correction ends. And currently looking at that this might just be a single zigzag, an A, a B, potentially a C. So looking out for potential resistance at that 61.8 fib retracement level. We got an R2 sort of like crossing our upper median line at 74.92. And then we also have that projected range high at 75.34. So where the price reaches that today, it's just, I think, there we go. It's just ticked yesterday's high. When that reaches today, I think it might have enough leg to do that. Who knows, maybe tomorrow, but watch out for potential resistance within this area. Price rockets through these areas, and I'm obviously completely wrong about this single zigzag idea, and might have to revert to sitting on my butt a little bit longer and studying what could else be going on here. But also very cool to see here is that price is also pulling back into all of this previous mess. We had support. Although it's a bit of a wide area, we might see sort of price penetrate that area and give a reversal. One of the first signs I think that we might see, or have seen the end of a correction, is that we start seeing consecutive strong declines to the downside after price hit an area. All right, that's it from me. I think I went on for about 20 minutes. Hopefully it wasn't too long. I still want to give Will enough time to do his thing. So that's it from my side, guys. Again, if you've got any questions, please do not hesitate to ask. Drop it in there in the chat box. But if you don't, then I'll quickly hand over the reins to Will.
Very cool. Well, thank you so much, Richard, as always, for the insights. It's always great to be able to pick your brain in these sessions. And as Richard just said, if you have any questions about the analysis today, our levels to lock, please feel free to fire away in the chat. We are always happy to chat with you. We're always happy to dig into it. So we'll give you just a sec to fire away there. Whether you're here with us in Zoom or if you're joining us on YouTube, please feel free to fire away if you have any questions. We're going to keep today's presentation moving along in the meantime. So in just a second here, we're going to bring in our very special guest. His name is Will Busby of Pure Financial Academy. If you haven't had the chance, we definitely encourage you to check out his website, purefinancialacademy.com. Will has some very cool stuff in store for us today, and as well as some cool links we're going to share with you later on. And we do want to make sure we have some room for Q&A with Will too. So at the end of this session, we'll make some room for you guys to steer us if there's anything you'd like to see again or any questions whatsoever. Of course, we are happy to dig into it. So it looks like we're good to proceed here. So Will, we're going to let you take us to the end of today's session, as mentioned, with some Q&A there. But Will, if you're ready to go, we're going to hand you the reins and let you get into it.
All right, I stopped sharing there. Yeah, over to you, Will. There we go.
All right. Yep. Should be
myself.
Here. Should be good to go.
Excellent. It's great to have you, Will. Thank you so much for your time in advance, and thank you for joining us. I will get out of your way, but to everyone here that's joined us, please feel free to fire away in the chat with those questions. I will make sure we get everything addressed in the order we receive it. So to you, sir.
Thank you. Thank you so much. First, thank you, for having us, building such a great relationship. These guys are absolutely amazing, to work with. It's a pleasure to be here for sure. Appreciate all of your participation and again, questions for sure, anything that you have. I'm going to there's a couple things that I'm going to do, but I actually need to get right out to the chart because we are literally about to hit something that I need to show you. And then we'll get to I was going to do a couple of slides first and then get to the charts, but I can't at this point. I just have to jump straight out to it. So I think you'll understand kind of what I'm doing here. And we'll go back to the slides. I'm going to do it in reverse, which is, I hope it doesn't throw me off, but so if I act a little out of sorts, then you'll know why. So first and foremost, let me go ahead and just disclaim this, right? So trading, as we all know, contains substantial risk for everyone, guys and gals. And just as we're going through this, I just want to make it very abundantly clear that this being for educational purposes only, okay? At least that's one slide that we can disregard when we go back to the presentation. So where is my screen share? Let me go ahead and let's see. I think, is it still being shared or no? Oh, here we go. All right, so we're going to do a screen share, folks. Let's get to, again, I just need to run straight out to the live charts first, and then we will we'll jump back to the slides here in just a moment, okay? So I'll give the whole introduction welcome speech, but what I had to do really quick is, unfortunately, I say unfortunate, very fortunate actually, but the target here is being reached. I will come back and explain this trade and but see how fast price is moving. There's a reason for this. So what I want to do is go ahead and get my target up to 40.72. So I'm going to lean in a little bit. Okay. So I need to go ahead and reach this target. I think probably throughout this session, you'll realize why. And I will come back and definitively show you the absolute reason. It's already hit the target. And I was, I was dragging it down because I was thinking, oh my goodness, well, we might be able to just kind of wait this one out and I could approach it later in the session as we're going through analysis and so on. But like I say, it's okay. So what we currently have is we have a supply trade. Again, I'll explain this momentarily. I am going to take our order suite. This here's our order suite label. We'll get to that later as well. And I'm going to drag that down, of course, protecting that their investment. So with that being said, if we go back down and we touch 40.72, this trade will be fully executed, in which we will no longer see it when we come back. Okay. Again, just kind of bear with me. Typically speaking, obviously this would have already been hit, but due to the session, in the event, of course, what I would not do is sit here and let price completely go against me. And in that case, I just got a little lucky. So it happens as I'm talking. But anyway, like I said, let's come back to this. Just wanted to show you so that when we get out and we're doing the analysis, you kind of have an idea as to what we're doing, how we're doing it. Okay. All right. So let me switch up the sharing real quick. Again, a little backwards there. I apologize about that, but we'll do the best that we can. Okay. I sincerely appreciate you understanding. Okay. So we're going to get to, if I can figure the right screen out here. There we go. So there's that slide. I told you we kind of go ahead and skip over that, right? We've already gone through that. I'm going to make these slides as quick as possible, just because number one, we're limited on time. And number two, quite frankly, the live charts are just much more fun, right? Okay, in my opinion. And hopefully they'll be a little bit more entertaining for you. So first, but I do want to tell you a little bit about us, Pure Financial Academy, PFA acronym. We're an online community dedicated to supply and demand trading concepts. We provided training materials and software to individuals looking to learn about trading since about 2009. So even saying that out loud, it kind of sometimes blows my mind. The time, it just flies, I guess, when you're having fun. So we strongly believe in the power of having others there to support you on the same path as yourself. And of course, we hope we're all on the same path together. So our mission is to provide a positive and effective environment for traders and investors who wish to utilize supply and demand trading methods, or just general trading methods as well, especially when we get out to talking about our order suite, of course, being applicable to not only supply and demand methods, but all methods. Okay. There's our contact information. If you'd like, I appreciate Nathan earlier mentioning, and I know that he has some links for you, which he'll share throughout the presentation as we're discussing them. But please feel free to reach out. Any questions that you have, we definitely want to be here to support you. That's we absolutely are big on support. We think, again, in a community, it's kind of the point in a community, right? So, okay, let's keep moving. What we're going to first look at, and this is, as I said, just an introduction, because I want to get out to the charts. But in order to get out to the charts, kind of need to know what it is that we're going to be talking about, what it is that we're going to be looking at. In general, supply and demand imbalances. And the first we're going to look at is demand price patterns. Okay, so price declines into a specific value which rejects any further decline. Previously submitted buy orders are reached, and the new buy orders begin to accumulate, right? So essentially we're going down, and you're going to know of these patterns. They have many names, such as to say, we call them valleys, but you may call them peaks, or again, it could be structure lows. There's a lot of different names for it, and we're not trying to say that there's one right way of it. We just call these valleys, but we'll go through that a little bit later, more in depth. Okay, so again, the previous orders, previously submitted, so it could be limit orders historically, right? So those are reached, and we know that because price absolutely stopped going lower and thereby was rejected. Then finally, the reversal occurs due to the consumption of the sell orders. So all of the sell orders on the way down get consumed. They have to, right? Or excuse me, rather, I should say all the buy orders on the way down get consumed. And then on the way up, i.e. that reversal, this is where the sellers are getting consumed. And as I was going to previously say, it absolutely has to, simply because there's no possible way for us to go above or below a specific price value without consuming it first. Okay. And I did forget, I apologize, you guys having to look at this. So I'm going to go ahead and pause the video. I'll come back on that, but you should still have the screen up. That's what's important here. All right. So these are just a couple of demand, right? Just price patterns. This is what we're going to be looking at today. Very simple, pretty straightforward. So again, we can think of those as valleys, structure lows, etc. All right. The next one that I want to look at, the demand price pattern, is where price briefly consolidates after moving higher, building compression, otherwise known as accumulation. All right. So the buy orders do begin to accumulate inside of this consolidation, and then continuation occurs due to the consumption of those sell orders. Again, we cannot go higher. This is a physical impossibility, right? We cannot go higher without consuming and or executing those sell orders. Now, the opposite. So we have two demand patterns, and we want to look at two supply patterns. So price rallies to a specific value, which then rejects any further incline and or rally. Previously submitted sell orders are reached and new sell orders accumulate. Okay, so they're building up because they think it's about to be a battle and they believe they're going to win. And in these particular cases, they absolutely do, right? So there's the reversal. It occurs due to the consumption of the buy orders on the way up. Okay, so again, these are our reversal patterns. And the last but not least, the supply pattern, if you will. Price briefly consolidates after moving lower, building that compression. Sell orders begin to accumulate inside of the consolidation. And finally, continuation occurs due to the consumption of the buy orders. So what we've looked at thus far is just very simple, straight across the board. It's what we're going to look at today and every day. It is our price pattern recognition, supply and demand. These are literally the only 4 patterns that we use to locate significant buy and sell orders on any given price chart and or any market. All right. So we want to locate the demand price pattern or patterns at resistance. So we're going to look for demand to accumulate at or near previous resistance levels. Supply is weakened after retesting the resistance level many times. Of course, you know, many support and resistance traders will debate that back and forth. We are not talking about support and resistance. This is an important distinction here. We're talking about supply and demand, which was originally submitted on the corresponding order, the corresponding market. Okay, so we want price to arrive, and then as supply weakens, the buyers may more easily accumulate and thereby consume the remaining sellers. In other words, they're going to consume them and defeat them. So simply put, in order to define demand, we need to understand what it's fighting against. And if we understand that there's supply there, and then furthermore, we can defeat it, well, now we know that the demand exceeds that supply. Conversely, the supply could exceed demand depending on what type of level we are looking at. Okay, so supply we want to locate at support. Remember, the inverse was true previously. So if we're looking for demand, we're looking at resistance. If we are looking for supply, we are looking at support. So we want to look for supply to accumulate at or near previous support levels. Demand is thereby weakened after retesting the support level many times. You can see it drops to it. As demand weakens, the sellers may more easily accumulate and consume those remaining buyers. And then they win the battle, right? All the fun. Okay, so here we go. I'm going to introduce you to 2 tools. We're going to look at on the chart as we go out and get to our analysis. Hopefully you will find that hopefully you'll love them, right? So we're super excited about it. One of which we've just recently launched, the one we're about to actually talk about. So we call this the PFA order suite. You're going to see it on the chart in a moment. The PFA order suite, which is fully NinjaTrader 8 compatible, is designed to increase time efficiency by utilizing multiple entry and exit methods directly from a drop-down menu. This is going to be right there on the chart, right? Which is placed there to just for convenience purpose. We don't want to be all over the place. The whole purpose in this is to be efficient and, time efficiency and, other types of efficiency as well. But ultimately, we need simplicity, right? We want to be able to submit orders and have all the fun functionality built in a simplistic way. All right, very good. So bracket orders, break-even trigger lines, and our unique entry zone. I don't want to dive too deep into that just because of the time limitations today. There are videos on our website, things like that, if you want to get some more information. They're easily toggled directly from that menu, the one on the chart that we mentioned. And additionally, orders may be submitted to a user-defined different market than that of the chart, which is loaded, okay? So we call this, potential hedging, but essentially I can be on the S&P E-mini futures and submit an order to the micro E-mini futures. And I can do that without ever leaving the E-mini futures. So again, submitting orders based on the analysis of one market, I can submit them to another without ever leaving the chart, which is very advantageous for us, especially because we prefer using the S&P E-mini ES futures, given that it has far more historical data than the micros. All right. Very good. So order labels can be managed, submitted, adjusted at any time. Orders can be submitted using the standard method, which is your typical, chart trading and so on. Or they can be hidden so they're not visible to level 2 data. We'll look at that later. Very good. And finally, so that's the order suite. And as I said, there were 2 tools. This is our zone suite. So everything that you see today, this is essentially what automates it, right? So if you're a supply and demand trader, for example, you may get really exhausted with defining your levels, going out and drawing them. Where's price going to turn? Let's go in and do the analysis. Let's draw the level. Did I get the level right? How am I drawing the level? I have to have a rule base, and we could go on and on down the rabbit hole, right? But essentially, maybe we don't want to do that. Maybe we want non-discretionary methods, rule-based and all that. Well, that's where the PFA zone suite comes in. Just to specify, the order suite is built into the zone suite. So if you decided to go with one or the other, you would not need to do both. Okay. So the order suite is the order suite. The zone suite is essentially both, right? Has the order suite built into it. So this is designed to reduce subjectivity and increase time efficiency by automatically drawing supply and demand zones on the price chart. It utilizes price recognition, volume distribution, and market volatility in its calculations, which are displayed on the chart with custom graphics, and they can be used for influence purposes, of course, confluence purposes, excuse me, and also for keeping track of historical data because it is fully back testable. All right, folks, and I'll just give you a sneak peek. Really no need to spend too much time here because we're going to do it on the chart anyway. But essentially, this is the order suite, which again is built into the zone suite. You can see here how we have a drop-down menu, very simple. These are the toggled lines. I can do all of this directly from the chart in a matter of, well, not even a second, I suppose. Very, very fast. All right, and then you can see how we can handle all of the orders directly from the chart as well. And finally, in the PFA zone suite, this is where you're going to see the zones on the chart and so on, okay? You'll notice that not only up here do you have the order suite built in, you can see a couple more icons here, right? And then additionally, at each and every zone, there's a user interface that we can submit orders directly from the zone as well. So there's really 3 ways to submit orders from within the zone suite, okay? All right, very good. And you can see that there. So there we go. We will perhaps come back to this. I do have 2 other slides that I just want to present to you. I'm very excited about it, actually. It will include free event. And actually, I'm super excited about this. This is actually a bonus kind of situation, but we'll come right back to that. Let's get up to the live charts and actually do some analysis. All right, so I'm going to go back through the sharing process. Hopefully I don't mess this up along the way. There we go. And you all should have, you should be viewing my charts. Hey, can you into the chat, for all intents and purposes, let's see. Nathan, would you mind posting just a Y if you can see my charts again?
Sure thing. Yeah, absolutely. And everyone here in the chat too, if you want to fire away, let Will know if you can see everything well. On my end, everything's looking great. It's sounding great. Excellent. Too.
All right. Thanks so much, Nathan. I appreciate that. Okay, folks.
No problem.
So here we go. Again, I told you we would kind of circle back to this. We had the short setup this morning. Now, when you're going through supply and demand analysis, right, I think as we all know, the most basic core concept of investing or really any type of buying and selling is buy low and sell high. Okay. So I know it's a scary thing. Here's how we always say it. When I'm looking to sell, it is almost always at the absolute most uncomfortable time. Conversely, when I'm looking to buy, it's not going to feel good, right? So for example, right now, here's what we see, right? Remember, we took this short this morning. We'll look at how we need to do that momentarily. But let's just look at these big red candles. Okay, so that can be a little bit intimidating. Most especially, look at where we were selling, right? I mean, if I scrunch up the chart, look at that move over the past, few days or couple at least. It can be a little intimidating, as we said. Excuse me, that's my coffee break right there. Again, it's very uncomfortable. It's not necessarily an easy thing to do, I say, especially in the beginning, because we're used to looking at a price chart, and for some reason we think the exact opposite, right? So when price is trending up, price is going higher, it just makes you feel like you want to jump in and be the buyer, right? Because you want to follow the herd, so to speak. But ideally, we would be on board from the beginning, okay? In other words, we don't want to enter at the end of a trend in the corresponding direction. We want to get the new direction at the beginning of the trend. So for example, today, when price was substantially rallying, right? So imagine we came into our live session this morning and the markets look something like this. So typically you're looking at that and it just makes you feel like, wow, the market's just super strong, in this case, the S&P, and it's just going to do nothing but go higher. When we start to overlay our general analysis, right, when we start to look at where the supply and demand is in the market, how far price has moved in one given direction and or the other, it gives us more information, right? So now I know, well, price has gone far to the upside. Not only did it go to the upside, it went abruptly, okay? So in other words, as we said it in the room this morning, too far, too fast. So there at minimum should be some rejection to that. Now, what we don't try to do, and I'm gonna lead you into the trade that you saw that just a moment ago. What we don't want to do, okay, we don't want to go predict that. So I don't want to go up and I don't want to say, you know what, just because price has gone too far too fast, I'm just going to jump in and sell it. No, that's not what I'm saying at all. What I am saying, however, is there are general areas, right, of, let's say, larger time frame supply and demand and so on and so forth. In addition to that, there are support and resistance areas. So what does that mean? Support and resistance could be levels, but it could also be lines on a chart, right? Such as to say this. So this is a trending channel, but if I open this up, ultimately I could put massive amounts of support and resistance. For example, right now, you know, we could come in here and do something like this, right? Well, as ironic as that is, and it kind of seems pretty basic, right? But watch what happens when price arrives down to it. So there are all these self-fulfilling situations in the market, and it's very ironic, but ultimately they all line up together. Say, for example, your Fibonacci ratios. So if you're going to have a pullback, generally speaking, it would be between 38.2 and 61.8%. Well, here's the irony in that. What you're going to typically find when it pulls back to that value, and as a matter of fact, let's do that right now. So I'll just use the general, as a matter of fact, let's just go ahead with our fib zone. I've introduced the tools and all that. This is included in the zone suite. But if you notice, we pull a fib number from the major structure low to the major structure high. And right here at about 38.2 puts you around 40.46, down to 40.21 at 61.8. So this is an open area, but what you can see in there is a support level and or demand, okay? Fortunately and unfortunately, I suppose, this level has already been tested, and we'll look at that in a moment. That being said, it's a self-fulfillment type of scenario, because now you have two things lining up and they may or may not be aware of one another. Our job or goal is to make you aware of it, us, right? So our community, we want to make ourselves aware of it and always try to stay on the right side of things to the best of our ability, of course, right? So again, what you'll see, I can draw this out, is again, hypothetically, if price were to decline, right, we may land right in a demand level, simultaneously reaching that support, the support line that we just drew, okay? And then we may have a rally over bounce back up. So again, all these things, you know, the confluence measures and everything like that, it's not just one thing, it's collective. There's a majority of things that can line up, and that's ideal, because if I know that, or, you know, have a good idea that there are a massive amount of traders doing different styles, but they're still thinking the same thing, that gives me a lot more confidence in what I am doing, okay? All right, let's see if I can get rid of that for us. There we go. Okay, so just a little bit of a general scenario there. What I'm going to do is show you really quick, okay? Here we go. I'm going to show you as we're in our demand level. So again, this is the zone suite, not necessary for all traders, okay? So again, this is more applicable to your supply and demand traders. You know, not everyone trades that, right? So we're going to focus a little bit more on the order suite, as that is applicable to all NinjaTrader users, right? As it is fully compatible. But still, suffice to say, earlier I told you, I said, we will come back to this and I will explain to you why I have my target where I do. If you notice, this line, it's just a line. It's a ray that I put on the chart, means really nothing other than, hey, this is your target, right? So why would that have been my target? Well, if we were selling the market over here on a smaller time frame, i.e. the 5-minute chart, the idea is to understand where it is likely to go. And in order to do that, I need to understand the bigger buyers and sellers in the market and or the larger time frames. So we're not trying to get this perfect. We don't get it perfect. Obviously, I don't think that's possible, but we do the best of our ability. We're not trying to say, hey, I know exactly how far this is going to go, because I'm here to tell you this thing could drop like a rock. Sure. And then, I could look back, hindsight's 2020, and say, oh my goodness, I wish I would have just held that trade the whole time, but it doesn't work that way. Not for us at least. And so we're not trying to do that. But if you look at the risk to reward here that was intact earlier this morning, so we were selling the market up around 40.85, and we were looking for about 40.72, but look at the risk. So let's look at it like this. And this, in our opinion, is the sustainability, longevity, if you will. Okay, it keeps us able to keep going even when we have to take on losses, right? So if I look at the market as such, I would say there's my risk, and here is my reward. So if I can do this over and over, time, right? I'm just throwing out hypotheticals here, but I could be wrong 50% of the time, and I'll let you kind of do the math on that. So it's, again, I want to reiterate, we're not trying to always be right. We're trying to be, as I typically would say, really right when we're right. Okay, if that makes sense. Now, don't get me wrong. We are absolutely hoping for better than 50%, but just to kind of iterate through a point there, hopefully that makes sense. So yeah, as far as analysis goes, so we got to see the trade. That was great. It worked out really well. That was the trade that came in from our we predetermined that this morning in our live session. And that was kind of the setup there. Now, before we did any of that, remember, up here, we were already saying, hold on, let's back up. And I want you to notice a couple things here on the S&P. And then I don't want to scare you, okay? But I'm going to come in with the analysis anyway. So here, what we did this morning is we took out a massive structure high over here. So what most people would see on that from a public, standpoint, is bullishness, right? They would think, oh yeah, we got above that. But the question that we ask ourselves is, why did it turn there in the first place? Okay. The answer is always the same. There's only one reason that price turns. We talked about those patterns. This is a supply pattern. In fact, we had this. If you were in our free sessions, you got to probably look on our YouTube channel, whatever, you'll see us talk about this level specifically, 40.50. Okay. We were looking to sell up there as we did. And you can see the result from that for multiple days, actually. But as we come back up to it, the order flow has been diminished and we're not looking there again. However, again, it's very important to us not to look at this as a bullish sentiment when we take it out necessarily. Now, it could be overall, right? But right out of the gate, absolutely not. What we're interested in is, hold on, why did this happen in the first place? And as I said, the answer is always the same, because at this general area, supply substantially exceeds demand. Okay. So again, let's open up the bigger time frame here. And what we're looking at is that's that support line. So we definitely are in a temporary uptrend. And one thing that I want to bring to your all attention here, okay, we have some supply above. So the issue here becomes, trading conditions are not ideal. They're not optimal right now. And I know that's not what we want to hear. It's certainly not what I want to hear, but it is what it is. Now, at the current time, our previous trade areas have been right here, which we anticipated a bounce, but maybe not a huge reversal. This level we are going to overlook, right? So what I want to point out right now is on the larger picture, to say that specifically the daily chart, we're actually looking far above 4276 3/4 and far below 35, just call it 3600, right? So we're looking at those two areas because other than that, we don't have any substantial demand or supply anywhere close to price. Okay. So again, I don't want to scare you, but for all intents and purposes, here's the picture that we're watching for. If this happens, and this is very important, if this happens right here, we can note all of this support that's coming in. Okay. So if we come back down to said support and we consume it, remember what we were talking about before, look for the supply at the previous levels. Yes. So if we come down and we consume that, then we are anticipating a fairly decent decline. So again, I'm not trying to scare you. This is just what the charts are telling us. We absolutely could be wrong. So we will see fairly soon, maybe. Now, conversely, it doesn't do any of that. And like I said, we just could completely have this off. Well, that's okay too, because we have a destination on the upside. All right. So for all intents and purposes, we are looking above and we're looking below for rather significant demand. And what we do in between and betwixt, we're going to go to the smaller time frames to do that. For example, right now, we're going to go over here to the 60-minute chart. And as I mentioned before, earlier, we predetermined a potential reversal. Now, it again, short-lived, right? Perhaps because we were anticipating that we could reverse to get at minimum back here. So what we're now doing is we're saying, okay, well, now we have 60-minute demand here. Whether you want to, this is the zone suite, I could toggle these off and we could just look at it from a, let's do it like that. Okay. So I could come in there and just draw in that level manually. It doesn't really matter. Okay. But again, we are coming down into these demand levels. And I just want to make a very bold point here. These demand levels, are they low or are they high? Remember, if we're looking at the core concept, buy low, sell high, would I be able to say that, yep, this is a very good buy low scenario? Absolutely not, because what I'm defining here is a previous historical trend. Inside of that trend, buy low, okay, and sell high. So even up to the 60-minute chart, note that we have demand way below, okay, way below. Now, if we're going at a scalping type of situation, we can go all the way over here to the smaller time frame. What I'm watching for right now, since we are into this demand, okay, note that price has already stopped declining and is bouncing up. So remember, this is not a buy low situation. Ergo, I'm not looking to buy it for a big move. However, if we come over here, you'll see already we're into demand. And what I could now watch is very simple. I could watch demand exceed supply, which is, in essence, exactly what we did up here. Okay, so we're trying to define our locations to the best of our ability. We're then defining the supply and the demand in the market. Make sense? Okay, so you can see why it's turning, where it's turning. Again, all these are automatic. They're derived for us. We don't have to do that, but we can. And I like to do it, by the way. I like this morning, we drew this in manually, but then we'll go put the zones on. I like to do it manually just for education and teaching purposes. But then, why make my life hard? Why not just put it on the chart, Okay, so these levels here, we can explain further in some of our next weekly session. I want to take you back so that you kind of understand what we're doing and things to that extent. I'd be happy to go through, as a matter of fact, on this coming Tuesday, if you decide to move forward, whatever, we'll look at that in a second. But if you do, there's some pretty cool things that we're going to be doing. We're going to be doing strictly analysis in our morning session there, okay? But to just bring a few things again on that daily chart, I just want to point out these larger time frame supply demand levels. And then I also want to point out this here, we're looking at a bounce play. If I see demand exceed supply and then I see new levels, so for example, let me turn this on, okay? We can see there's supply up here. So let me revert my statement there. If I see demand exceed resistance, okay, then I can look at potentially taking this back to the upside solely because we're coming into a 60-minute demand level. All right. So yeah, on a bigger picture, I'm not really expecting these to hold because of the simple buy low, sell high and all that. But again, even if we get a bounce from it, imagine what that will look like. Okay, so just kind of look at that on, even if we just got a small bounce, look at it over here. You know what I'm saying? It's much bigger from an intraday scalp perspective. All right, very good. So a little bit of S&P analysis. We're going to run through all these others. We did also have a NASDAQ set up this morning. That one's already closed out there, but that's okay. So the same type of setup, we had a sell on the NASDAQ, bigger picture and all. So let's do this on Monday. Let me try to get some Q&A real quick. I only have a few minutes left. And I'm going to get you back out to the slide. Before I do, I want to show you this magnificent bonus tool that we're going to put into to any of our joining members. So this helps us substantially. What it is a PFA tab selector, and you can basically run through your tabs very, very fast, right? So notice how every chart is changing, okay? We can go look at gold. By the way, we have our supply levels on gold. Again, we'll talk about this on Monday. And natural gas. So we're bouncing out of, we had two setups on natural gas. We had predetermined a demand level there. We also have a demand level here, but natural gas is looking pretty weak. So we'll go into that. next, again, on Tuesday. Again, the selector here, yeah. The selector here is just going to bounce you, to and from your tabs, and it makes, again, we're all about efficiency. Everything we can do, we're going to do for efficiency purposes. This is the tool. It's quite nice. We can name the tabs and put as many up to 20 as we want in there and so on. Let's get back out really quick. Let me do this share as I'm going to conclude with a Q&A. And so I just want to get you guys and gals out. Look, at the end of the day, our goal is to get things to folks, and we're doing our best to do that. Not just affordable, I would say to go beyond affordable, but we're doing our best, right? So first and foremost, Nathan, if you wouldn't mind posting that link to the free session there. So if you want to sign up for that, that'll be Tuesday, April the 4th. On the 23rd, on 2023, of course. So that's next week at 9 a.m. All right, you can go ahead and do that. And then here's our tools, right? So when I say affordable, I mean it. We have the order suite that you can get for only $9.99 per month. If you decided that you want the supply and demand, then of course you could simply go with that for only $69 per month. So either way you go, we're very excited about it. We didn't get to do a lot with our order suite. So if you can jump in there, at least you'll see, you did see it earlier in the presentation when I had that trade going. That was the order suite. So we can do all of this. I would encourage you to take a look. Nathan, if you wouldn't mind, post the order suite. Yeah, there we go. So that $9.99 offer there, go look at that. There's a video on that page if you want more information. Just go check out the video and you'll see some analysis, but also we're using the tool to show you how that works. And then finally, the PFA Zone Suite. Nathan, if you wouldn't mind posting that finally, that's to the Zone Suite. Of course, there's a video on that page as well. So by the way, keep an eye on that 60-minute level. We can now see that there is demand there. It is rallying out of our level as we would anticipate. But here you go, guys. No discount code needed. Just go ahead and get that done on those links. If you decide to do that, we are, as I said, we're going to include the PFA tab selector absolutely free, no charge for that whatsoever, right? And then also we're going to invite you to those weekly sessions, which is, we enjoy because we're going to be doing full-fledged analysis and it's just going to be ongoing, but it'll be specific. We won't need to run through an intro. We won't need to do any of that. We'll just get straight out. Hey, look, this is what we're looking at on the S&P, the NASDAQ, gold, natural gas, you name a market, right? And we can go out and look at it. But those are pretty standard markets for us. Oil, euro, et cetera, the common markets we like to focus on. So let me get to some Q&A real quick. If you have any questions, I'd love to entertain them and get those addressed for you. And in conclusion, that is what I will do here. Will this work in the micros? Yeah, absolutely. Oh, it's no worries. I appreciate your kind comment, though. No worries. It absolutely will. So it will work on any data that you have into the Ninjacators platform. So, we were talking about the ability of the order suite. One of the things, right? Let's say we're on the micro, but I wanted to submit, or let me give you another hypothetical. I'm on the SPY ETF. And I want to trade that market, but maybe I want to hedge it with the micro E-mini. So I could do that using the order suite. Okay. But yes, both of our tools absolutely applicable to the micros as well. We love the micros, by the way. So yeah, absolutely. Did I miss any questions? Let's see. I'm going to take, it looks like we have maybe about 2 minutes, just about 2 minutes left.
We got a couple minutes.
I know we're going to try to get out a little early.
Yeah. So if anybody has any questions, please don't be shy. There's no such thing as a dumb question. And we always love to discuss with you guys. We love to chat. So please feel free to fire away here in the chat if you have any questions for Will about all this great information he shared, as well as some of these very cool low barrier ways you can just jump in, go get started with him on his website. So yeah, and if you're joining us from YouTube as well, please, we encourage you if you have any questions, and just want to make everyone aware too that if you do want to see this replay, you can head on over to our YouTube after this broadcast. And if you want to pick through anything that Will has showed us again yet today, we'll also make sure those links are available on YouTube so you don't lose track of them. Excellent.
Awesome.
Well, Richard.
Yeah. Hey, Nathan, I don't see any current questions coming in. There may be some, on the other chat or so on. So that's okay.
Sure.
We will make ourselves readily available. Anyone who has questions, reach out through the website or, however you desire. It certainly works for us. Yes, unless you decide it, JJ, we can talk about that a little bit. You want to email or whatnot, there are options to get into our community training, which is, which goes on, multiple days throughout every week. Right. But yeah, with these, unfortunately, we can't, just at the price points and so on. We gotta kind of keep it to somewhat of a minimum, because ultimately what we believe is you're paying for the software in and of itself, but we just include, that type of training and ongoing analysis to do it together at the end of the day. Yeah. Good question. And thank you for asking. Really appreciate that. Nathan, I'll turn it over to you.
Absolutely.
Thank you all so much. We really appreciate your time and efforts, and we absolutely hope to see you again soon.
Sure.
Awesome stuff, Will. Thank you.
Absolutely. Thank you so much. And Richard, I was going to pull you in. And as Richard's aware, we usually leave a little space here at the end of the session for some parting wisdom. But yeah, this is Richard's first exposure to some of your stuff, Will, too. So I was just going to quickly pick his brain if he had any insights or anything he wanted to point out.
Yeah, I mean, great to see. I mean, a little bit of different analysis, obviously, that I'm using. But I think, Will, you'll probably agree, it's like you want to do business at certain areas on a chart.
Right.
You must have the patience and obviously know how to manage your risk, to wait for those areas to be hit, and then know how you're going to actually do it before price actually gets there, so that you're prepared, not chasing the market, etc., etc. So very similar to what I do, like to identify the areas I want to do my business at, I call it, and then trade them,
Yeah, absolutely. And
like
I
your
will tell
value
you,
areas, some people might call it. So love it. Very, very similar to what I do. Awesome stuff. Nice.
That's what I was going to mention, that, the similarities, because when I was watching, your analysis there, I really loved it. I really agree absolutely with, we may use different terminology. Everyone does things a little bit differently, but I absolutely couldn't agree more. Like your analysis very much fits, I think, very well with what, with what we've done for, going on over 13 years, I guess now. And love it. But I think at the end of the day, it just makes sense, buy low and sell high, and predetermining the area.
Patience.
Yeah, patience.
Have the patience.
It's a virtue.
It comes with time, unfortunately. Almost.
And we're always working on it, right? We're always trying to better it, but yeah.
It's an ongoing project, but it's certainly worth the investment. So
yes.
Very, very cool. An excellent fit, Will, having you here. It just made sense to bring you in, and I think it went very well. We very much look forward to having you again. So I just want to thank you again for your time here today. I know, as far as Ninjacators goes, we, this relationship with you and with Pure Financial Academy, there's lots that we'd like to get into together.
Yeah.
So absolutely. This may be your first intro, but we certainly expect to be active with you on other fronts, as well as in future sessions here in Profits at Noon. So once again, just thank you so much for your time. Thank you for joining us. And thank you for sharing those valuable insights, as well as those great links, which one more time, I do want to encourage you, just navigate there in the chat. There's lots of great resources he shared with you, some free events you can get into as soon as next week. So if you miss Will, if you find yourself yearning over the weekend, all you got to do is hit that link and you can see him again on Tuesday.
You'll still be there.
You guys are incredible, man. Again, thank you. Right back at you. Everything sounds absolutely amazing. And I honestly, I think just working with you guys in particular, thus far has been, I got to say, everything that we've talked about, everything is just, it's an excellent relation, because I can tell the way that you guys do things. You truly care. You're trying to get the best information out you possibly can. I respect it very much. So absolutely look forward to everything ongoing.
You're welcome. Well,
yeah.
Thanks very much.
I hate to throw the word synergy around, but there's lots of it. So
yeah.
Fantastic.
Excellent.
Well, thank you to all of the attendees, everyone joining us here within our Zoom and within our YouTube. It looks like we lost a couple of our usual suspects today. It seems like there was another webinar happening somewhere, but we do hope to catch up with everyone again next week. We'll be back on Monday at noon Eastern for the next edition of Profits at Noon. And we did get a request over on YouTube for next week. Richard, they're ready for more volume spread scalper. So we'll be looking for another volume spread scalper demo next week on Thursday. So definitely stay tuned with us. If you're joining us on YouTube, just encourage you one more time to hit that link to sign up and join us in Zoom, get event reminders, as well as direct access to the Q&A. All that said, we are going to go ahead and shut this down. We won't see you again until Monday. So in the meantime, everyone have a great weekend. come check out the replay on the YouTube channel. Again, Will's links will be available. They will be posted there, so you cannot lose track of them, and we encourage you to check that out. And we'll see you all again soon. So thank you so much, and we'll see you on Monday for another edition of Profits at Noon. Thanks, everybody. Bye-bye.
Cheers, everyone. Take care. Have a good weekend, and see you Monday. Bye-bye.